Okay, fam, today we're going to talk about the top 5 stocks that are going to possibly explode your portfolio in 2025 and that I'm buying right now in November of 2024. Don't worry about subscribing, smashing the like button, or looking for the coaching and Discord link just yet. We will talk about that very, very soon. Let's dive in and talk about the top 5 stocks that you need to add to your portfolio this November of 2024, or right now. But first, huge announcement. Today, I am hosting my free masterclass retirement webinar. That's right, guys, absolutely free tonight, November 22nd, 8 p.m. Eastern Time, 5 p.m. Pacific. I hope to see you guys there. Are you struggling in the market? Do you want to get yourself on the path to profitability and retirement? Whether it's early retirement or planned retirement, does not matter. If you guys want to retire, this is the webinar for you. I'll be having a huge announcement during the webinar and hosting a Q&A, answer your questions, and every student that's ever participated and attended my previous webinars say they learned more from me in 1 hour than they did anywhere else. I look forward to seeing you guys there. The link is in the information box below. Let's dive right into the video at hand. So in this video, I'm going to show you guys 5 stocks that are going to have a lot of potential growth ahead of them that can help you grow your portfolio pretty rapidly. So let's start with the top 5 stocks. Number 5, Wayfair. Wayfair has made its way down the list from number 1 and 2 down to 5 right now, only because of tariff potential problems going forward. However, Wayfair is trading at a current price to sales of 0.5. Anything less than 1 is insane and heavily undervalued. Apple has like a 9.35. Palantir's is a little bit lower and a little bit better than that. However, looking at Wayfair, it is extremely low. You take the market cap of Wayfair, which is 5.34 billion, and divide it by total yearly trailing 12-month revenue, which is over 11 billion, and you get less than 0.5. Wayfair also recently beat the guidance on EPS and earnings. However, their future guidance was a little lower. And with the dovish feds and the economy getting better, rates going down, and the dovish feds also projecting to cut the rates again by 25 to 50 basis points or more in 2025, and everything being on track for that to happen, the only question left for Wayfair is the tariffs. The stock was at $50 when I projected it was going to do well the first time, or actually the second time, and the stock fell to $38, and now it's back up to $42 or $43. It is growing and making its way up right now. I believe by the end of the year, we could be approaching $45 to $48 or higher, and by the New Year's on the next earnings, things are going to start getting better for Wayfair. Right now, the fair value on Wayfair, barring any issues with tariffs and bringing imports into the country, is right around $90. Now, we've got a range of different fair values all the way from 65 to 105. Really, the fair value, if you're going to go really safe, is between 70 and 80. The stock is 40. So there's a lot of upside here. They just launched the Welcome to the Wayfair campaign, opening physical stores. They want to have 10 in the country by 2025, the year end. And they have one already physically open and launched in Chicago, which was a complete success. So Wayfair is a great stock to invest your money into, and it's going to continue to make my top list as it's continuing to, and it's going to continue to make my top picks because I believe that this stock is primed and ready to go. You can see right here that Wayfair is making its way back up right where I said it would. I drew these arrows back on November 11th, which was a little over a week and a half ago. And here Wayfair goes now right into this wedge, into a breakout. Right now, I'm looking for a price target by December, somewhere around 47. That's what we're looking for right now. And on the 1-hour chart, the 10 is above the 20-day average, and they're both above the 100. Things are looking good for Wayfair. They beat the previous earnings, and they barely missed the one before that and the previous one, and they beat the earnings in February of 2024. So the last 4 earnings have been pretty good. They've been pretty decent. They slightly missed on 2, but they beat and crushed the other 2. Wayfair has a lot of potential. So now that we looked at number 5, Wayfair, we're going to move on to the number 4. But first, if this seems confusing to you, price to sales, price to earnings, technical analysis, news, fundamentals, maybe your head is spinning and you want to retire. Maybe you want to just have safe passive, consistent income. I would love to help you. I offer a full Discord, training course, and one-on-one coaching. Look, I grew up in a Catholic household. My family was very hard on me, especially my mom, about helping others and doing the right thing. My father works with the homeless veterans. He's the director of the Northeastern Division of the United States, and he gets homeless veterans off the street. My family is dedicated to helping others, so I set out to help others myself. What better way to do that than to help hardworking families be able to retire early? If you guys don't believe me, you guys can see the profits on the screen from my students who have turned $8,000 to $30,000 in 4 months. Other students from $30K to $80K in as little as 3 to 4 months. Let's listen to what my students Josh and Adam have to say.
In just a short amount of time, the program that you offer, I've learned so much, and I've changed my entire approach to investing. You know, I'm much more structured, much more safe, and I've seen consistent, profitable growth. So I started with $15,000, right? I am now at $40,000. Okay. And I'm so proud.
I do think what differentiates Corey from others is just the honesty in his coaching. He's available, he's there, and he has just a very, he's very focused on helping people learn and become successful traders. So I started a little over 6 weeks ago, and I'm happy to report I'm up just shy of 20% on my entire portfolio, equates to $58,000.
So you heard what Josh and Adam had to say. If you guys are interested, I would love to help you grow your portfolio. It's what drives me every single day to help you achieve your financial freedom. You guys can do so at any time. The link is in the information box below, and I look forward to seeing you and helping you on your journey. Number 4 is The Honest Company. Now, this didn't make number 1 because there's other companies in this list that I think are a lot better, but The Honest Company very well could deliver you a 3 to 5, maybe even a 7 or 10x return in the next year or two based on current and projected growth. The Honest Company offers wellness care and baby products that are non-toxic and a lot healthier and a safer alternative than what you find in the stores generally from CVS, Walgreens, Walmart, Target, anywhere you're shopping for baby products. They provide much safer and non-toxic products. Diapers, wipes, skincare, wellness, and so on. The Honest Company has doubled their stock price over the last few months, and it looks like there's a lot of exponential growth on the table. And I want to touch base on some of these things that make Honest Company a very good investment. We see here the market cap is $772 million, and when we look at the trailing 12-month revenue, it's $368 million. So let's go ahead and we're going to divide 772 by 368, giving us a price to sales of 2. This is incredible. This is a very incredible price to sales. And if we look at the revenue, they have good revenue, good trailing 12 month, good growth. And they also have good operating income, and they have a lot of growth on their total revenue. Pre-tax income, $184K, not the greatest, but it's profitable. So is their net income, but up from the negative $4 million in the previous quarter. EBITDA is also up from negative, which is significant for this company. Balance sheet, they have assets, $200 million, liabilities, $70 million, which exceeds by almost 3 times, basically 3 times. Their net debt, they're sitting on $10 million in cash, which is not a lot, but there is no debt. Cash flow is $15 million positive. Their cash from operating activities is $15 million. Cash from financing activities is $1.86 million, and they're negative on the investing activities. So based on everything I'm looking at, this is a solid company to invest into right now. And looking at the chart and looking at the earnings, how they've beaten the earnings and where the future projection is, if they can break into profitability in March, this stock could go to $20. Right now, I see a 2x between now and March, barring any bad news. The Honest Company, a solid number 4. I would really consider putting somewhat of your portfolio into Honest Company, maybe 2%, 3% to be safe, maybe a little more. Personally, I wouldn't go beyond 3 to 5% max to play it safe, but this is a solid investment and all the numbers are there for the potential growth. And like I said, with earnings, if they crush the earnings in March, it's going to go up even more. And we might have some pullbacks back down to like $6 range, like $6.85, $6.50. But as we go into March, Trump takes the office, the economy starts getting better, it could start going up. And not only that, if earnings are good, it's going to go up even more. So my price target, honestly, is potentially going to be between $9 and $11 for March, maybe higher. So could potentially see a 2x return. Number 3, stock to buy and add to your portfolio. This is no surprise. I've been telling you about this stock for a long time. The number 3 stock, SoundHound. Look, this is a stock that is primed and ready to go. I told you guys to get in when it was $3.60, and it ran to $8 on the previous earnings. Of course, it went back down to $6.30, $6.20, then it went back up to $7. Now it's over $7 again. If you look at SoundHound, they beat the previous earnings, which is the first time out of the previous 4 quarters. And if we look at the solid support, there is a ton of support, a ton, sitting around $5. There's also really good support, as I will point out here, right there, and right here at $6. The likelihood of SoundHound going below $6, highly unlikely. I see it holding $6.50 to $7 going forward minimum. If they beat the estimate going forward on the next earnings, which is coming up on March 11th, again, another stock primed and ready to run. If they crush earnings even better than they did this time, then the stock is likely to see upwards of $10 to $12, maybe a little bit more. This stock, on any good news, like a partnership with McDonald's or other restaurants or automotive, pretty much anywhere could send this stock, out of control and exploding. But some good news, some good PMI data in December and January and February with, manufacturing and of course services is also going to help out. Dovish Fed cutting interest rates will also help small caps like SoundHound. Donald Trump taking the White House, that's just yet again another helping hand to this stock. So with all of this happening, I honestly see end of year it stabilizing at $6.50 to $7, maybe some more upside to $7.50. And going into the new year, January, February, March, I see SoundHound making a run for next earnings closer to $9. And if earnings beats good or crushes, it could run to 10 or 11 and settle in. So I would strap in and get into SoundHound now before they start turning real profits. Because right now they're not really turning a lot of profits, but their 2025 projection is huge. So you want to get in before that. SoundHound, in my opinion, is one of the biggest growth potentials in 2025 and 2026. So I would definitely add this to your portfolio if you haven't already and be safe. Like I said, 3 to 5% of your portfolio, diversify. Nothing's guaranteed, but it is looking like this stock is going to head towards $10 to $12 for earnings. And now it is time to talk about the number 2 stock, which I've talked about a lot, SoFi. I told you guys to buy this stock when it was $6, $7, $8, $9, $10. Now it's over $15. It almost hit $16. I told you guys $12 to $14 by the end of the year, and it hit $15, almost $16 already. $16 by the end of the year, maybe even $17 is fairly doable. This is a very strong stock. It is a fintech / bank. Anthony Noto said, and quote, "It's not a matter of if, but a matter of when SoFi becomes one of the largest banks in the United States. They have a banking charter. They have Galileo to assist them with all the technicals on the back end of running their system. Their lending program and their lending income is also going to recover in 2025, most likely as well. And they have so many products being added. SoFi has also increased its revenue and increased its guidance for 2025, and they've increased 30% year over year. This is a stock that has significant upside. If Anthony Noto is right, and he is a really good CEO, I told you guys this when the stock was $6, that Anthony Noto is sandbagging the stock, under-promising, over-delivering, and that it would explode, and it is. We have 3 things to consider with SoFi. 1, the dovish feds stay dovish, and they continue on their path to cutting rates. Number 2, PMI service data continues to expand, and PMI manufacturing data continues to correct. And number 3, inflation continues to drop, and things keep going the way they are. If these 3 things happen, SoFi is going to explode over the next few years. It's hard to say exactly where and exactly when, but I don't doubt that this stock has potential to reach $30 by the end of 2025, maybe even $40 by the end of this year. 16, maybe 17 or 18 is possible. But either way, this stock, in my opinion, based off of all the fundamentals and technicals, has a fair value of a little bit more than $18. In fact, it ranges between 15 to 23 right now. I would say this stock is honestly worth what you're paying for it and has a lot more upside. When we look at price to sales, market cap 16.29 billion, and we divide that by trailing 12 month at 3.63. So what we're going to do is we're going to divide 1629 by 363. 1629 divided by 3.63. A price to sales of 4.48 is really good. We also look at their balance sheet, trailing 12-month revenue and quarter-month revenue, very, very good. Pre-tax Pre-tax, good. Net income, very good. EBITDA, solid, and solid growth from the previous quarter. We look at cash flow, 15 million in free cash flow, 61 million from operation activities. If we look at their balance sheet, their net debt is only 264 million. Previously was 1.62 billion in cash, but their trailing 12 month is 203, which is not a lot of debt at all. And their assets is 34 billion, liabilities 28 billion. They have enough to buy out all of their liabilities and their debt and still have money left over. So they are in the positive. This signifies pretty strong growth for the future, and forward guidance on price to earnings ratio is a little bit different. Currently it's 124, but their future guidance price to earnings is around 60, which is even better. So you've all waited for it. The number one stock to add to your portfolio is not going to come to a surprise of anyone. It's a stock that I've been talking about for months, even more than SoFi. Can you guess what it is? Number one, Palantir. Palantir has an astonishing 263% year-to-date growth, outpacing NVIDIA and the entire stock market. And they got added to the S&P. And they have new contracts with the government. They have $500 million contracts with the US government, Project Maven, and they're continuing to increase their revenue, and year-over-year growth is astonishing. This is a company that you should have invested into when I told you the first few times when it was $15 to $18, and then it was 20, 21, 25, even 30. I told you guys 50 by the end of the year. We have already broke 60 on Palantir. This is the stock that you really shouldn't have missed out on. So now you're going to have to sell cash secured puts, and you're going to have to wait for some dips, dollar cost average. Palantir, in my opinion, is the NVIDIA of software. And I've said this before, and all the haters are silent right now, because when I called $50 back in May and June, they all came out of the woodwork saying, oh my God, this is never going to happen. Palantir sucks. And guess what? For all of those haters that said NVIDIA was better than Palantir, well, guess what? All the people invested in Palantir this past 3-4 months have made more money than NVIDIA investors. Is what it is, right? NVIDIA went from $96 earlier this year to $140, and they've pulled back many times. That signifies a 50% growth year to date. Well, we look at Palantir, 262%. So who's really winning now? Palantir investors are. This is a stock that you absolutely can't miss out on. Now, there could be some pullbacks back into the low to mid 50s. It's potentially possible, but I don't see it happening. Although stocks, after they're added to the S&P 500, within 3 to 6 months, pull back a little bit and settle. So we could see a pullback between now and January at some random point where it'll pull back to like $48 to $50, maybe 53, somewhere around there. Maybe a little more, maybe a little less, but it is possible. And if it does, I would dollar cost average. Let's look at Palantir. They have a market cap of 139 billion, basically 140. I told you to buy this stock when they had a market cap of 40 billion. If we divide that by the trailing 12-month revenue of 2.65 billion, that doesn't really give us a good price to sales. Now, that is the only thing that concerns me, is the price to sales not being that good. So we look at 139 or 140, and we divide that by 2.65, giving us a price to sales of 52. This is kind of on the low end of things. Really, they need to increase their revenue, but if we look at their operating income, it's solid. Pre-tax income is solid at 157 million. Net income, 143 million. And we also have a solid EBITDA at 121 million. Cash flow, free cash flow, 415 million, almost $1 billion a year. 419 million in operational activities. Assets are 5 billion. Liabilities are only 1 billion. And they're sitting on 3.74 billion in cash. Actually, it's 4.31 billion in cash. When you look at price to sales being one metric, it's a great metric to go off of, but right now all of the other metrics are indicating price to sales will increase. Because their market cap is high, they really truly need to have somewhere in the vicinity, even 10 would be good. So they need about 13 billion in trailing 12-month revenue to have a good price to sales, maybe even 10. Anything over 10 billion in trailing 12 months will line right up with everything else we talked about. And right now they're at 2.65. So the next earnings in February and the earnings after that in May need to be really good to justify this price. But remember, in the stock market, we are baking in and pricing in all of our future guidance, and their 2025 guidance is a lot higher. Their price to earnings is lower, and their revenue revenue is higher and their growth is expected to be exponential compared to what it's already been. And at a 262% year to date again in 2025, it's going to go to a 300 billion market cap and the stock's going to be $130. And at that point, I would expect price to sales to be a little bit lower and more improved as well. Palantir is a solid investment and it's proven time and time again to be solid. You guys can sell cash secured puts, dollar cost average, and keep it to 3 to 5% of your portfolio. If you decide to add more than that, then it's up to you. But this is our number one pick right now, outpacing every stock on the stock market and making it to the S&P 500. I'm going to give you guys a bonus pick right now. Bonus pick, it's not ranked in the list, but it's something I don't want to leave off. And your bonus pick is Walmart. Everybody knows Walmart. Walmart is a solid stock and it's old money and they've crushed the earnings time and time again. I'm looking at their market cap of $710 billion. I'm going to go in here and look at their financials. Trailing 12 month is $673 billion. They have a price to sales of barely over 1. Let me show you guys what I'm talking about. 673 goes into 710, okay? 710 divided by 673, giving us a 1.05. A price to sales of 1 is solid, very solid. Their revenue, $169 billion, almost $1 trillion, almost $750 billion a year. Insanity. Gross profit, $175 billion trailing 12 month. Operating income, almost $7 billion trailing 12 month, almost $30 billion. Pre-tax, $6 billion a quarter. Net income, almost $5 billion a quarter. EBITDA, $10 billion EBITDA. That's insane. Cash flow, well, $17 billion trailing 12 month, almost $400 million free cash flow per quarter. Their operational activities is almost $7 billion. We look at the balance sheet, their assets is $254 billion, which is more, almost double of their $163 billion in liabilities. We look at their debt, $52 billion, not a lot. They could buy out all their debt and liabilities and still have pretty close to $50 billion left over. Very good condition this company is in and poised for more growth. Their price to earnings is also pretty good at 35. Stellar is between 20 and 30. So they've got a stellar price to sales and an almost marginally stellar price to earnings. And they've crushed every earnings call in the previous 4 quarters. Walmart is not to be taken lightly. This is a great stock. And with the dovish feds, interest rates getting cut, and of course, inflation falling and the economy getting better, especially under Trump, Walmart being one of the biggest American companies is set and poised for a lot of return. Walmart currently is up year to date 70% and it's grown 70% in a year, which means most of its growth has happened in 2024. And the last 6 months has been 35%, outpacing the S&P and outpacing other stocks. Let's go ahead and look at Amazon. Amazon's year to date is 30%. Walmart's is 70. 6 months, 9%. 3 months, 11. Walmart is 35 and 16. 1 year is 70. Amazon 1 year, 37. Walmart is outpacing Amazon. Look, for anybody who thinks that Amazon is going to put Walmart out of business, like Redbox put Blockbuster out of business and like Netflix put Redbox out of business, not going to happen. Walmart put Toys R Us out of business. Walmart also put Kmart out of business. Amazon is not putting Walmart out of business. Walmart is old money. I can pretty much guarantee you that it's going to be impossible for Amazon to put Walmart out of business. They have too much money and they're also showing on their balance sheet and their growth, they are outpacing Amazon. If we look at their market cap of $710 billion, Amazon of $2 trillion, then we also look at shares float of $939 billion and Walmart of $435 billion. When we look at that, Walmart is half the price, but they have half the share float. So that goes without saying that technically speaking, half the share float, you should be double in price, which would put Walmart at 160. Well, why is Walmart 160, not 200? Well, that's the market cap is also different. It's double Walmart. But that also shows you future guidance and projections, because if we were to double the shares float on Walmart, the price would be about $44. Then with the market cap the way it is, we would go ahead and 2.5 it, give us a price of 110. It's still behind Amazon. That shows us that we have a potential $85 upside divided by 2.5. So we have a potential $40 upside. My projection, without getting too crazy into all of that and trying to keep it simple for you guys to understand, is that my price target for year end of 2025 is about $130. This is going to give us about another 50% return on Walmart. Very strong stock. And it's going to be very hard to lose money on Walmart unless they have a lot of bad news. There might be a pullback. I could see Walmart by the end of the year, January, maybe pulling back to 82, 85, and then running again to 120, 130 by the end of 2025. It's also a dividend stock, and they're going to be paying dividends of $20. So this, another solid stock for you to buy now in November of 2024. Don't forget, guys, my free retirement webinar, my masterclass retirement webinar is tonight, November 22nd, 8 p.m. Eastern Time, 5 p.m. Pacific. Everybody who's attended my webinars in the past said they've learned more from me in the 1 hour they spend with me than anywhere else. You guys don't want to miss it. Links in the information box below. Very limited spots. You guys need to register very soon before they fill up. Last time there's hundreds of people that couldn't get in. There's going to be a Q&A section for you guys to ask me questions one-on-one, as well as a huge announcement that you guys don't want to miss out on. If you guys also are interested in signing up for the Discord training course and one-on-one coaching, I would love to help you, fam. Link is also in the information box below. I will see all of you guys on the next video. One love, take care of yourselves, and remember, let's grow our wealth together.